Hey, what's going on, guys? In this video, I want to go over a reason why we probably shouldn't be trading right off the open. Um, been teaching traders how to trade, been working with traders, been trading alongside traders for a very long time now, going back to 2000, probably 19, for sure in 2020. But what I've noticed is a lot of times retail traders, they're very excited to kind of start the day. It's kind of like either they made a lot of money yesterday and they want to come into the markets today and kind of repeat that process, or a lot of traders tend to lose money the day before and they're so eager to get back into the next trading day where they've got to make that money back right away. That's probably the worst mentality that you can have. I've got a big mantra, a big mentality where, I'm looking for the 1 hour trade day. Okay. And what that means is if I can sit up and I can stay focused for at least 1 to 2 hours each and every single day of whatever session that I'm trading, and I can make money with inside of a 1 hour window, I'm done. Okay. Because this business is all about longevity. It's all about survival. It's all about being able to protect the money that you do have. A lot of times we get really wrapped up in we made super fast money early and we want to sit there and do it all day. Or we took a couple of bad hits where maybe the trade just didn't work out. It just didn't go in our favor. And now we're scrambling trying to make all of that money back later on in the session. So 1 hour trade day mentality is definitely something that I recommend everyone to have. What we're looking at here on my screen, on the left hand side of the chart, we're looking at a 1 minute. On the right hand side of the screen, we're looking at a 5 minute. Now, you can do things such as sitting out the first 30 minutes. You can do things as sitting out the first 15 or the first 1 hour. But what I would recommend, okay, what I would recommend is to at least not take anything with inside the first 1, 2, 3, 4, 5 minutes, okay? Because typically each and every single day when the New York session opens, there's extreme volatility. And the way that market conditions have kind of been treating us since the end of December 2024 is we're getting extravagant ranges, right? I mean, these ranges are extremely volatile, where it's exceptionally hard to kind of manage your risk and your stop loss, even if you're trading small size. So a lot of times I will tell people, instead of trading one mini contract, go to five. But even you're going to notice on 5 micro contracts that it's still hard to kind of control. Maybe you need to go down into 2 or 3 micros, right? Again, you're still able to make really good money trading 2, 3, 4 micros. You just need to be able to protect yourself, okay? And the best way to protect yourself is by cutting that size down. But I want to focus on the left-hand side of the chart. Now you're going to notice here, New York session is going to open. First candle is going to close red. However, it does try to spike a little bit over that recent pre-market little pivot high there, and then comes slamming back down. And then you're going to notice that it starts to wash out, like the market's just going to start to go down from here, and then an aggressive snapback, right? So you're going to notice these 4 candles here, these 4 or 5 candles. This is the first 5 minute candle. So here, this candle that looks like a hammer candle, this first red candle close on a 5 minute time frame is red, but there was a lot of volatility. And when I mean a lot of volatility, a lot of times traders will see the market open up green before it closes red and they'll go long and then they get stopped out. This volatility on this candle is 46 points. I don't know how you trade, but it's exceptionally hard to manage a 45-point risk, right, on any size. For 1 micro contract, you're looking at potentially $90, and you could potentially lose $90 a micro contract in 1 minute. Like, that's extremely hard to kind of manage. You're going to see the next candle here has a volatility range of around 58, 60 points, right? So yeah, maybe you can get lucky off the open and kind of fire a short position here, make 20, 30 points. What that's going to do is create a bad habit. And the reason why it's going to create a bad habit is because for every time you just jump momentum, where you're just getting in on a quick move and that trade wins, subconsciously you're going to think that you can do it over and over and again. The problem with trading is that nothing is guaranteed and everything is built on probabilities. So the probability is going to come around that you will lose a trade. And as good as it feels to win 30, 40 points or 20 points or 10 points in a minute or less than a minute, it feels 10 times worse when you're losing 20, 30, 40, 50 points in a minute. So what I would recommend, sit out for at least the first 1 to 4, 1 to 5 minutes. Allow yourself to see some structure on a 1 minute time frame. And if you're a day trader, you're a scalper, even if you're taking trades off of the 5-minute time frame, off of the 15-minute time frame, off of the 2-minute time frame, whatever time frame that you're trading, I would always recommend to run a parallel 1-minute chart. Okay, that way you can kind of see the ins and outs of how the bigger picture is setting up, right? Because a lot of times, if you notice here, a lot of times this looks like it's just a straight move down where you could have just, hey, I could have just got short today and just rode this all the way down. But the truth of the matter is that a lot of times you can get short and then it's going to bounce 50, 60 points. In between the bigger move, there is big bounces as well. So you have to make sure that your position size is going to be small enough to where you're not going to get emotionally wrapped up and get scared or get stopped out on those potential pullbacks in a bigger trending move, okay? So in this particular situation, if I was to mark out the first 5-minute high, okay, this is almost like an opening range break for the first 5 minutes, and mark out the first opening range low for the first 5-minute candle. I don't necessarily trade the 5-minute opening range, but I use it more so as a range where I'm not touching price inside that first 5 minutes. As good as something seems in the 30 seconds or 40 seconds or 2 minutes off the open, as good as it seems, normally more times than not, what I have realized is when I think it looks great and I get into that position, it normally screams against me and automatically stops me out. So I like to see just a little bit of a structure and a little bit of a range be built, okay? So if you notice what kind of happens after the first 5-minute candle, you're going to notice a 20 SMA play pivot to the downside here. Again, we're still in the middle of this 5-minute opening range. One could take this short, but you would have to be targeting the 5-minute low. Okay, that's where traders get themselves into a lot of trouble, is because they'll get a setup, they'll get into a trade, and they'll expect that it's going to just continue. I never expect that we're going to break down. I never expect that we're going to break out, especially if I'm taking a setup inside of a range, okay? So if I'm taking a setup inside of a bigger overall range, a consolidation block or something like that, I never expect that I'm just going to break down or break out. What I'm looking to do is either get in on the setup confirmation, which is going to be here, 635, and I'm looking to just scalp that down into the bottom of the range, right? Because I want you to think about ranges like this. The bottom of the range is support. The bottom of the range is buyers. The top of the range is sellers. The top of the range is your supply. So you're not going to want to be selling into these buyers if we have not sold out of our merchandise, so to speak, if we haven't taken out all of the buyers, right? You're just going to want to sell into the buyers and then take your money and walk away, right? So in this particular situation, we're definitely not going to take this setup short. We're definitely not going to take this setup long. What we're going to do is wait for at least the first 4 minutes to close, and then we can start, opening up and waiting and looking for that next potential setup. So I see two setups here is if I have that hard rule. Again, remember, if you don't have that hard rule, you're going to jump short here. Then when it snaps back, you might get stopped out. If you don't have that hard rule of sitting out 1 to 4 minutes, you're going to take this long and you're going to get stopped out. So you could potentially run into 2 losing trades within a matter of the first 2 to 4 minutes. Even if we were to take the short setup after 5 minutes and it doesn't work, I'm avoiding one potential loss. Because in this particular situation, I could see a lot of traders getting stopped out on the whip back, and on this potential situation going long, I could see traders definitely getting stopped out on the pullback. So I would rather take 1 loss if this fails than taking 2 losses, because mentally it's going to be not as taxing on the brain, not as taxing on the emotions. So I might be interested in this play, but what I like even better is if we do break down through this range. So you can play this one of 2 ways. You can allow this breakdown to happen, and you can take what I call the first entry, which is the first breakdown through the range. In that particular scenario, when I play breakdowns or when I play breakouts, I always know that we're going to put in a new price and then it's going to shoot back. So I want to be very, very protectful, especially if I'm playing a 1-minute time frame. I'm not going to sit here and look for 20, 30 points. I might look for 3 points, I might look for 5 points, and if I can get that scalp on some decent size, it's going to be a nice little trade. The next thing that I would do is allow the range to get broken and then wait for a follow-up candle. Okay, so when the range gets broken, now we've put in a new low, you can wait for the follow-up candle. And even in this particular situation, if you wait for the range to get broken, it's going to put in a new price of 21,096. Okay, once we confirm that price, it goes down to 21,080. So it goes down 15 points in a matter of a minute, a matter of 20, 30 seconds. So as a scalper, you can definitely find a pocket where you can make $100, $200 on these quick scalps. Now, let me give you a situation. Let's say, for example, we took the first entry or we took the second entry here on the confirmation and we made $200 or $300 and we're trading a funded account. That funded account gets locked up. Okay, either I'm going to walk away because I'm already looking at the 1 hour trade day mentality, or I'm going to completely close that account and go over into another account. I'm not too concerned about trying to make $1,000 a day per account, $500 a day per account. My whole focus when it comes to trading prop firms and it comes to trading funded accounts is if I can log $100 plus green day, I'm done. Okay, because in those particular situations, I know that the more days that pass, the more days that I can log in these over greater than $100 days, I'm on pace for a $3,000 month. I'm on pace for a monthly payout per account. Now, here's the kicker. Making $1,000 from the prop firms is not a lot of money. Okay, it's very achievable, but it's not going to set the world on fire. You're not going to be able to retire off of it. The kicker is having 2, 3, 4, 5 accounts. The more accounts you have and the more accounts that you start to say, if I can just take 1,000 here, 1,000 there, 1,000 there, now starts to turn into a really great monthly income. You're talking about having 3 or 4 accounts making $3,000 to $4,000 a month. Maybe by month 3 you have 5 to 6 accounts where you're making $5,000 to $6,000 a month. Over the course of 12 months, maybe you've worked yourself up to kind of managing 8 to 12 accounts. Could be in the range and ballpark of making $8,000 to $12,000 a month. Taking these trades, trading 1 hour a day, looking for one setup. If the setup works, you stop. If the setup loses, okay, fine. We're managing our risk. Maybe the next trade can get us back into business. Let me give you an example of what a stop loss might look like on a potential play like this. Always, always, always have to analyze how much potentially you're going to risk on the trade before you even get into the trade. In this particular example, if we were to take the first breakdown here, this is a 50-point range. If I'm taking this breakdown through that 5-minute kind of range that we've set up for ourselves, I'm going to use the candle that I'm entering. I'm going to use that high as my stop. Okay, so in this particular example, we're getting in through a price of 21,114. The high of that entry candle that I'm taking, that high is going to be 21,147. So I'm looking at potentially a 30-point risk. Now, there's nothing I can do to get away from that. The only thing I can do is maybe trade a 15-second chart, a 30-second chart, which I'm not going to do. Okay, my brain doesn't compute that fast. 1 minute is even fast, is a little too fast for me sometimes. There's nothing we can do about that because the market conditions are permitting that type of range and volatility right now. Things will slow down for sure, where you'll get ranges on the 1 minute chart that are going to be closer to 10 to 15 points. But right now in the current market conditions in 2025 of January, that's what we're looking at, and we're going to have to kind of work around that. Here's where traders start to mess up. They don't understand that that's the range that we're in right now. They continue to play the same size that they normally play. And when they take losses, they're taking losses 2, 3, 4x normal than what they would take on a regular basis. So maybe in this particular situation, if I'm going to give up 30 points, it's around $500 on one mini contract. Maybe I play something between 5, 6 micros, where instead of risking $500 on this trade, I'm going to risk maybe $200, $250 to potentially make, $150, $200 to the upside. I try to keep my risk to reward ratio around 1-to-1. Sometimes it's a little negative. Like there's instances on a 5-minute time frame where I might start off with a 20-point stop loss, 5 to 10 point take profit, but I never intend to let it touch me at 20 points because I'll stop myself out before that is if I see technical damage. I'm just starting off that bracket to just protect my ass from the jump, but not necessarily looking for it to just completely stop me out. Okay. Sometimes it happens where there's nothing you can really do about it, but that's why we have that hard stop loss in place. So in this particular situation, your hard stop loss in place is going to be over the 1 minute candle high, and you're just going to look for that quick scalp to the downside. So if you notice 21,114, in 1 minute, it shoots down below that and goes to a price of 21,096. So we're talking about almost 20 points to the downside here. If you wait for the next candle to open up, it goes down to 21,080, which you're looking at about 35 points. Now, being that we're starting off a risk here of around 25, 30 points, and being that this is a 1 minute chart and I'm just looking for a quick take profit, if I'm trading 5 micro contracts and I can pick up 10, 15 points, if I can pick up 20 points for sure, I'm going to sell out of that position, because 20 points on 5 contracts is going to be over $100. And that's a decent trade, right? It's a decent trade. If you get 5 points off of 5 micros, you know, you're looking at around a $50 win. So when you start to find these trades and you start to pick off $50 here, $100 here, $200 there, you can start to build that 1 hour trade day, because it's only going to take 1 or 2 trades and you're going to be able to stop. So just make sure, again, the whole purpose and focus of this video is to just not chase anything within the first 1 to 4 or 5 minutes. Let's wait for something to develop outside of that range, because again, that's when the day is just starting to figure out who it is, right? And a lot of times you're going to get big flashy moves up and big flashy moves down. And a lot of times, you know, the price action and momentum looks great. And by the time we get into it and we actually get filled on the position, it's already going the other way. So one thing that has really helped me is sitting out of the market a lot of times when it opens. You know, I've even done things where my strategies are just not working in the first 30 minutes, and I've put a hard rule on myself where I put myself on a timeout where I can't even look to take a trade with inside the first 30 minutes. But the one rule that will never go away for me is 99% of the time, 90% of the time, I am not really looking to take a trade with inside the first 1 to 4 minutes. Even on my opening drive setup that I teach in Evolution Traders, that setup needs to happen with inside 10 minutes, but the sweet spot is between minute 4.5, 5 to minute 9. Okay. And if that doesn't happen, then I go on to my next setup for the day. But for sure, the first 1, 2, 3, 4 candles on the 1 minute chart, I am not looking to really get involved too much in the market. I'm more so looking for specific ranges to get broken or confirmed before I enter into those trades. So maybe you guys can try that out, where you guys kind of sit out the first 4 minutes and see how you kind of take your day from there. Maybe it calms things down a little bit and you're able to be a little bit more patient. Guys, I do want to do a little housekeeping. Inside of Evolution Traders, we're adding a new segment inside of Evolution Traders each and every single morning. I have brought on a new trader where they are going to do a pre-market scalping show. Okay. They are going to be going over a rapid edge strategy where it's using the 1 minute time frame, and it is scalping the pre-market going into that New York market. If you're interested in that, you guys could definitely join Evolution Traders and be a part of that each and every single morning. I'm also going to do a segment where about 30 minutes before pre-market, I'm going to put out some hard levels where we can potentially go long or potentially go short off the New York Open. Okay. And then I'm going to do my regular live trading call with D about an hour to hour and a half after the market is open, and kind of cover that midday price action going into lunch. And after lunch, we normally get that lunchtime reversal and going over those potential setups. Again, a lot of good stuff in the works. We added the pivot break system course. That is also in the link down in the description box below. If you guys do need any Apex accounts, okay, use code DAnthony. It'll definitely toss me a cup of coffee my way every time you guys use the link. Make sure to like, comment, and subscribe, guys. Again, I put in a lot of hours into this, a lot of back testing, a lot of live trading goes on in the room, a lot of teaching, and I enjoy it. But I want to make sure that you guys are getting value out of these videos on YouTube. So if I'm providing any type of value to you at all in any of these YouTube videos that I put, just do me a favor before you guys get out of here. Smash the like button to let YouTube know that you enjoy these videos. That'll definitely keep me coming on here and posting these videos for you guys. I will see all of you guys on the next one. Make sure you guys have a great weekend. You know, we got a lot of playoff football this weekend, so whoever your team is, drop that into the comment section below. Love to know if your guys' team is in the playoffs or not in the playoffs. Again, my team's in the playoffs, but quite frankly, going into the playoffs, we probably look like the worst team going into the playoffs right now. Let me know who you think my team is. Again, I'll see all of you guys on the next video.